Hi everybody, it's Adam. I'm back here with another video. I'm going to go over the market from the 12th and also the 13th, which is today. Getting over to where I expect price to go to from here. Basically, I don't know. Same thing as we always been doing, alright? So we have potential draws and liquidity higher up within this gap and also up within here. And also this void that we have up in there that has not been touched. So this entire area, if we go bullish, up into there. If not, just some more consolidation. And then if we go over to NQ as well, we can also see here in the weekly time frame that we do have these highs up within this area that we could then draw up into this area. So I got my eyes on those. All right, so going over to the market, what can we possibly see from yesterday? Because I did not do a video yesterday because there wasn't really much movement of my liking personally. But anyways, a day before CPI, which was today. So, well, today was CPI, but the day before was yesterday. Yeah, we would expect consolidation, but we did see a nice range rip on up through, as you can tell from these images right here. All this consolidation, we broke out of the consolidation and retested the high of the inversion gap there, and then it also traded back up into these relative equal highs that we have up in that range. But I'm going to go over also, this is today's trade. I'm going to go over this in a little bit, but I'm going to go over yesterday first. But anyways, we came up to this high within here, and then we came back down and basically created this entire range. And look at these relative equal highs. That's pretty suspect to me, and that looks like price wants to reach up and into that range. Okay, and at the same time, if we're looking at NASDAQ, let's get it to actually pull over. Oh my gosh, here we go. At the same time on NASDAQ, we have this high up within here. If we do trade down, which we did, we hit the new week opening gap here and traded away. At the same time, ES came down, it hit the opening range closing price and then traded away. But notice the bullish SMT from this low to this low. Lower low over here, from this low to the same low, higher low. So that's basically bullish SMT in that range. But I'm going to go over ES here. NASDAQ wasn't as clean in my opinion. But anyways, price is just accumulating in this range. It took the low, took this low, all these relative equal lows, and it started trading away. So now we took a low. Now where can we look for the high? Where's the buy side at? Up within here. So I'm going to look up in that higher part of the range. So we go to the 5-minute time frame and notice this inversion gap here. We can go down on the 2-minute. To give you some more information. So higher time frame basically gave us context of higher movement. And then now we have this inversion gap that's sitting right within here. So I'm measuring these gaps that really stick out to me. And I want to see how price starts respecting these gaps. And then if they want to act as support or resistance for the bias. So the bias was this high, these equal highs. And then this inversion gap actually act as support going into that area. And we also have this inversion gap here. As you can tell, draw this out in time. And notice how we came up and closed bullish, and then we started trading back up into the high of this range and back up into here. At the same time, NASDAQ also had bullish SMT within this range. We have higher lows here, lower lows there. Go down to the 1-minute time frame. Notice all of this. So this is a lot of chop in my opinion, but it broke up into this range, came back down, and then we started breaking out again. And within here, it used these order blocks as support to then continue price breaking out towards this upper part of the range. We broke out here, tested the high of the range with this 1 wick from that inversion gap that I mentioned earlier, and then I basically traded up to the high right within there. So that's a nice little movement up and in, then continuation up to the higher parts of the ranges. But that was basically it for me yesterday, watching price. Yes, there's some other movements, but that's really like what caught my eye for the silver bullet type of entry. I do consider my trading time up to like 11:20, 11:30 in the morning. So like that's usually when my best trades actually do form, is between 9:45 and 11:30. I like that range. That's usually when I'm at the computer. Anyways, CPI today. What did we expect? So I was actually working out right before CPI came out. I knew it was coming out, and I always like to wait a little bit after the news comes out anyway. So I was watching, and I noticed that these lows were hit, boom, and then these highs were hit, boom. So like basically right away, lows, highs, taken. And then we trade up into this range. So now we're already bullish in the higher time frame. We took out these lows, and NASDAQ already is looking for these lows here. These lows were never met here. And then also on the 1 hour, there's an imbalance. So price had to reach down and into that level, and also created bullish SMT, as you can tell here with this wick. So we made a lower low here, a higher low on ES at that time. Anyways, we reached down and into there, but I'm going to go over just like what happened here with price action. So this was like my thought process when price was working up higher into this range. I was expecting price to still continue up on through even after the news, up on through into this area. But I did not partake in it. I'd rather observe than take a trade in something like that early. So just tape reading price, that's where the best traders are formed. It's the ones that can tape read and really have no FOMO with the trades and being okay with anticipating price in a direction and not being in it. Those are the ones that are going to make the best traders. But anyways, we shift on up through, especially at this bullish closure here. We basically just continue to trade back up on through into the higher parts of the range up within here. Use fib extension levels or even higher time frame targets for something like that, or even just the 5 handles if you want. And then we had the bullish SMT that ended up sending price up into the higher part of the range as well. And then we had the consolidation up within here. We shifted down lower, came back down in the lower part of this range, and then we took out these internal lows here and also hit a fair value gap. And then we started to shift away from that area. So if I pull this up over here, notice how we shifted away from this area here. And then we came back into this fair value gap right within this range and then traded back up on through. And this wick came down, tapped the high of this candle here, and then traded back up above the buy side that was here. So everybody that was long here, a lot of people had their stop loss here. They came down, took their stop loss from them trailing it. Price shifted structure, retested back into the inefficiency, traded up higher here. So now everybody that's short up here has a stop loss above this high, raids the high, and comes right back into the range. Nothing new. So now we have the high up within here, a short-term high here, and a short-term high here. So basically trades back down on through, fills in this fair value gap. So if we're actually going to stay bearish, we're not going to violate this high within this range. And we're going to keep coming down, back down on through towards this liquidity there. Also the midnight open, as you can tell, rejected right out the midnight open. So now we go over here to NASDAQ. Now look what happened here. So when we took this high here on ES, we actually made a lower high here on NASDAQ, and then we shifted down below. Once we shift down below, we had a bearish closure, this 1 minute candle here, then retested this area, and then continued price down in the lower parts of the ranges towards this sell side down in this low here. So in measuring price to reach down and into that range would be a nice target, which would also line up with that 1 hour gap that I showed you a little bit earlier. So then we trade down, shift market structure again, and then we come up, test this high. Same time we're making this higher high here. So bearish SMT again on these wicks and also this area within this fair value gap. Price then trades back down on through. After this 1 minute bearish close, it's really confirming that this fair value gap wants to hold price to send it down. Retest it here. Boom. Something very, very simple. Stop loss, TP. You're looking for a total of 40 handles, but 20 handles, profitable. You know what I'm saying? But I do like that kind of setup right there. And we trade back on up through. This is really where my ideal setups were starting to form, which would be this trade here that I'm about to talk about. When price did trade back on up through this area and then came back down on in here. So we closed up above here. Once we closed up above this inversion, I'm looking for higher pricing. So at the same time, ES closed right up above this inversion gap here. So once you close up above this inversion gap, we traded down into the fair value gap within the discount after the market structure shift. And now we're targeting this high, NASDAQ, we're targeting this high, and then also this inefficiency up there. So I was looking for price to reach up into that area. So trade back down and into here. We saw some bullish SMT when this wick came down here, but we made a higher low here. So after this wick closed, I entered the trade and noticing that we still have not hit the buy side up here. And we had these relative equal highs as well. And we had this high here that was not yet met. Price comes up on and through. And then I take some more positions. I'm looking at this. It's all starting to be balanced and that we should not return back down, especially down below this area here. So notice how price comes up. I took more trades within this area right here, looking for a continuation. Was not heavily positioned up in here. My heavy position was down here. So then price came down a little bit and I started taking my partials. And then I just closed out the trade right within here because I did have an appointment for 11:30. So I had to get going and leave. But anyways, this is just what price did. Came down into this inefficiency. So staying back from the emotions of everything, looking at the chart from an objective standpoint, price was just retracing down and into this area using a 2 minute order block, which also aligned with a 5 minute order block. So using this order block, this swing low should not be violated if we're going to continue towards the buy side up within here and also up within here, because we are in an obvious buy program after taking out this higher time frame low and then shifting our market structure. And now we're using order flow. So now we have to get in sync with order flow to reach towards our draw on liquidity. So liquidity is taken, higher time frame PD array is met, and now we're seeing bullish structure in the form of order flow get us up into these areas that we are targeting up in this range. So now we go back down to the 1 minute time frame, which is where we can get lost. But knowing what you're looking for on higher time frames and lower time frames, if I was not having to leave to go for my appointment, I would have entered another position right within here. So this bullish 1 minute closure didn't even take this high yet. Wicked here. This would be a very beautiful trade to get us up into the closure of this gap that's within this range right here. So I would not have taken the whole thing all the way up to this high, but this is a very, very nice area for another 40 handles up in this range, risking 20 and then going for 40. But ideally, you're looking just for 20, just something like that. Just like this entry right within here. Right down in this closure here, after that came down, created that SMT, this closure here. You're looking for this to act as actually a breakaway gap, so not to reach down and into there. You're just looking for 20 points right there. And then we got up to actually 30, and then we're actually looking a little farther up into here from that area, about 70. That's what we were looking for, but did not quite get it. Anyways, price action came up into this area, traded back down and through. This is a lunch session, so looking at price action again. Notice this, okay? We come up into this area, we hit our objective, now we just consolidate. We have relative equal lows here, here, here. All these, there's so much liquidity down below these levels. And now go to the 5 minute time frame on ES as well. 1, 2, 3 highs, and then we make this lower high. So we rejected this area here. So if we actually measure out this wick here, let's see if it's at 25% or so. It's about, yep, about 25%. So when it hits 25% of a wick like that and rejects it, it's actually very, very bearish. So when you see a rejection block in this form and we come up and we reject it at a 25% level, it's actually a high probability that we are going to get some more shorts coming in to target the sell side. Where's the sell side? All these lows. For everybody that buys, their stop loss is right there. So I'm looking at that level as well. So price ends up creating this high, and then another short-term high to the side here. So we're looking at these levels, and now we shift down below this area using this fair value gap here. So actually, let me bring this up using this fair value gap with a bearish closure down below it. So now we get our bearish closure. Now we're looking to see what we can get in price action up within here. And where's our sell side? Here, here, and here, and all these relative equal lows, and even came down below this one down here before rallying back up. But anyways, price shifted down below, and now we're looking at these candles. So this whole area is becoming balanced as we trade away. Just notice how it's just wicking it every single wick right here. Trade down below, come back up on in to this area up within this fair value gap, and starts trading away again. Ideally, this is a very clean entry here. So that's like the 2022 model that ICT talks about, break a market structure, break right below here. So we came up, hit our higher time frame PD array, traded away, break a market structure, retest the fair value gap, go towards draw on liquidity. Basically the same thing. But I like how it came down and utilized this breaker from down within here, then started trading down below in the lower part of that range. And that is actually one of my models. I don't have it pulled up right now, so I can't show you. But it's in my Discord somewhere, and I think somewhere on my Twitter too. Anyways, price does trade back down on through, coming down, targeting all the sell side down below here and down below here, looking for those lower levels. But that's basically it that I saw today in price action. So anything like this, honestly, anything like this, you wouldn't want to see this high be taken again. So you'd want to see this gap especially act in price. So this fair value gap here, draw that out. Then you'd be targeting like the equal lows that would be right about here. So you're going like 20 handles is actually way up here. But if you're going from 120 handles down to here, go for it. You know what I'm saying? And then price even here after we get that 1 minute candle closure right there. I do like the entry right on that when the new candle just opens up, wicks on in, and then starts trading away. If you're going for 20 handles, boom, very quick in like a minute or two, minute and a half or so. So just something like that. You can get a 1.15, and then you could even target a little lower if you're going for the higher liquidity, which would be down here. So over a 2-to-1 on something like that, and that goes for 40 handles there on NASDAQ. So pretty nice day, very solid price action, good to study, good to screenshot and put in your notes, because I personally screenshotted these. These are the ones. I turn my screen to white, and then I screenshot them, I print them out almost every single day. I'll print these out, and then I'll write down my emotions. I'll write down why price did what it did, and where are the high probability entry points based on my model and how I like to find trades. So wrap this up here. So if you guys have any questions, let me know. Take it easy. Love y'all. Peace out. Not financial advice.